up, guys? Welcome back to my channel. Finally have capital to trade the live market, so there's a nice sell opportunity. So let me place my orders first. So okay, I'm risking around 252 US cents. I was able to deposit like 1,000 rand into Exness, and that gave me a lot of capital. I have like 5,000 now. You saw at the beginning of the video. So look at the setup, guys. It's London session continuation. Let me remove this. London session continuation in New York. It's New York session, guys. As you can see the time, it's 10:02. It's gonna be fundamentals at 5. So look at this, the daily chart. Ne? We call this a long range day. Why is this called a long range day? Because you can see the body. Look at the body of the candlestick. There's two inside days in that long range day. So this on its own just shows me that this is a ranging market. Right here, we're ranging right here. These are bad market conditions, guys. So right now I want to scalp. These are scalping environments, because if you try to swing trade in these types of market conditions, it's either gonna need a huge stop loss or you're gonna get stopped out. Those are the two things that's gonna happen. Look at that. You see, it's a pure ranging market. That's why the setup that I'm taking is a 1:2. 1:2 it's a good setup though. London session continuation in New York. We did price in London buy side liquidity. That's where I will place my stop loss. My entry point is right there. Let's go down to the 15-minute chart. The 15-minute chart again, same methodology applies, guys. I don't want to see. Look at that, we're ranging, right? We're clearly ranging. Clearly ranging. These types of price action, we call this high resistance liquidity run, because there's a lot of back and forth price action. This is not a good trading condition, guys. I would advise you to not trade when the market is doing this. It's either you scalp and then you out of there, or you don't trade at all. I think that's the much simple explanation. Friday was very, very, very choppy, but we did respect that inefficiency right there. Going into today's trading day, we took out the relatively cool highs right there. We took them out right there, and then during London we started tumbling down, but we failed to take out the previous day's high. Look at that, the previous day's high, we didn't take that out. We also didn't take that out. So it's a clear choppy market condition. That's why market conditions like this, you should just stay away, bro, and try to avoid them for real. So the thesis behind this trade is that it's just London session continuation, bro. It's nothing too crazy. Again, it's a small scalp. The rest to reward is 1:2. 1:2, and that's a huge stop loss in my opinion. But look at London. Let's observe London. You see this inefficiency. It was created before London session open, around Asian session. So now going into New York session open, the market was in a bull trend. It was making higher highs. It's okay. It was pricing higher. Then by the time we went into London session, we started tanking. Now we went down, had a retracement, respected in inefficiency, then we tumbled. For the rest of London session, we tumbled, and then we took sell-side liquidity that was printed in Asian session. We took that out, and then we respected a key level, consequent encouragement. You see that blue line right there? I call that the consequent encouragement. Is the midway point of a fair value gap. It's rather simple to spot. So these are my levels right here. This inefficiency right here, the midway point of it, I'm looking at that closely. I'm looking at that level closely. And I don't want to see this inefficiency. I don't want to see this inefficiency getting filled in. If it gets filled in, that to me is a no-no. That to me is something that I don't want to see. If I see that happening in price action, this is going to be a losing trade. Let's go down to the hourly. You see the hourly. This is the fair value gap I'm taking on the hourly chart. I'm waiting for this inefficiency to get filled in. Once this fair value gap gets filled in, and then the one on the 50-minute time frame remains unfilled, that to me indicates that okay, New York session has more momentum to the downside. As you can see, it's like lower, low, low. I know this market is ranging overall, but just looking at the market structure, at the current time, there is a sell opportunity from my perspective, from how I trade. There is a selling opportunity for me to execute on. So let me guys keep you updated. Sure. I'm in the trade, but I don't like what I see. I really don't like what I see. You can clearly see here we're having some high resistance liquidity run back and forth price action. I'm kinda in a loss currently, nothing too crazy, but to me this is a huge red flag. But again, my stop loss is right there at London session liquidity, so I'ma just keep on waiting. By the time the market reaches this line right here, this inefficiency, I have to bring my stop loss to break even, because now there's a lot of warning signs when it comes to this trade. There's a lot of red flags. I think I might have to mitigate the risk. I might have to mitigate the risk for real. I might have to. Yeah, I'm mitigating the risk, guys. I'm mitigating the risk. Singathi ngizithola sengumi-threshold sengibhayiziseka futhi. Okay. I need to see rejection from that level. From this level, guys. Currently, yes, this trade is not favoring me currently, but again, at least I was able to mitigate the risk. And this is not the best setup I've ever. This is not the best, I understand, but it's probably like an A minus setup, because again it was there, but the confluence of the trade and the fact that we are in a ranging market, that on its own just makes it slightly less probable, you understand? That's all that matters. It makes it slightly more unfavorable. These are unfavorable market conditions, because you can clearly see we're having up, down, sideways, down, sideways. There is no trend here, so it makes it more tricky for me to trade, because yeah, it can do whatever it wants to do now, but it's okay. At least I was able to mitigate the risk, even though I don't have full risk on, and again I increased my risk to reward. I just increased it, but it's okay. I'll catch you guys. Show you guys like the progress of the trade. See you then. Guys, break even trade on the day. It was a good setup. I won't complain about it though. Even though I would have taken my 1:1 and made a profit in this bad market condition, it's okay. It's your boy Actually, I'll see you again in another trade.